Well, in year 18, when I did come to the end of the retirement funds, I was faced with some decisions I'd have to make. We could sell our house here. We're in Los Altos, California. We could sell our house here, take the money, go and buy something smaller for cash, live off of that. I don't know if there were a whole lot of other options. I was still drawing Social Security, so I had money coming in from there. But it was going to be a situation where we would probably have to sell the house. And this is a home we've been in for 45 years. We built it for our pleasure. We have a beautiful kind of a mountaintop view of over the Santa Clara Valley, and we're close to our doctors and our friends. We don't want to move, but that was a decision that was looming.
The thing about what this show can provide for people is a roadmap to having options. And if you can learn from somebody like Ken and from the veterans that we have here as the Not Your Average Investor show, you can see that this has been done by others who have been successful. And if you get started on it, what you're trying to create is options for yourself, so that when you get to a retirement age, you don't have to decide, do I have to sell my house and leave the community that I've been in for 45 years in order to have my retirement account and my retirement be comfortable? Like, create an environment where it's an and conversation, not an or a but conversation, right? That's what we talk about when we're talking about building a better retirement account through rental property investing. And so, Ken, I think you even hosted one of the Not Your Average Investor meetups at that beautiful home that you have, right?
We did.
There you go. Well, if, that is proof right there of how this thing comes full circle. So it's pretty incredible to watch your journey.
Greg, I'm not a numbers guy, but I just did a little bit of a calculation, right? If we are talking about, because Jag is in the chat asking, is this still possible today? And I think just from a conceptual standpoint, if we're using this baseline of $500,000, right? Which, by the way, is more than the median saving that the average American gets to at 65 years old, right? I think those numbers are about 300,000. But let's say somebody gets to 65, they have $500,000 in their retirement savings, and they put money into some vehicle that's paying them 5%. That to me is $25,000 in cash flow a year, right? That will continue to do that. Whereas if I just think about the very just like meat and potatoes numbers of this, homes in Jacksonville right now are around $250,000. Rent in Jacksonville right now is around $1,400. I'm looking at just like one-to-one comparisons of that, of 25,000 bucks in cash flow per year that doesn't have a lot of upside versus closer to $28,000 a month in cash flow that doesn't have a lot of upside. And then I think about, well, if we were to do that year over year, rent is going to go up. So that cash flow is going to continue to go up versus that 5% that doesn't. And then I think about these other options that Ken has figured out for himself. One, the jumbo reverse mortgage that added to that piece of the pie that works really, really well, in this kind of scenario. But beyond that, the idea that, once you find some more money to invest and start generating cash flow from that stuff, you can then take these homes that you've put the $500,000 into, refinance, get other homes, increase that cash flow, right? Like, am I understanding it correctly that even in today's environment, with the right creative financing and the right, scenario, right? Which is why people go to chatwithjwb.com and have your team build out a plan for them. But even in today's market, if you reach this kind of retirement issue at 65 and you wanted to increase cash flow and have it continue to grow, as opposed to just like max out the cash flow you can get and then have to like siphon off of that for the rest of your life and hope you don't live another 28 years. Am I still right in believing that this is still an option?
Yes, absolutely. That's where the planning component starts. And if we're sitting down with somebody that has $500,000 in their retirement age, the first question we're going to ask is, how important is cash flow to you? And we might build that plan entirely around achieving a certain cash flow number for that individual. If another individual comes in a different stage of life and says that they have $500,000, but cash flow is not as important to them, total return on investment is the most important thing to them, we might build it very differently. We probably would. right? The cash flow plan, the max cash flow plan is probably going to be all cash purchases. The total return on investment plan is probably going to be using conventionally financed properties to build your portfolio. And so that's the beauty of this asset class. It works when you are in your 20s. It works when you're in your 30s, your 40s, your 50s. It works when you're in your 80s. There's just flexibility that you have here. And so that's why we love the seat that we sit in, because clients get to come to us. We jump on the phone. We have an honest conversation about their goals and their resources. And then we get to do some financial engineering. And it's so much more than just the asset. That's why we talk about the team is so important here. Because if it was just the asset, we might not, and it's an inexperienced team, they might not build it to achieve those goals of max cash flow or max return. So the flexibility of this asset class, the limited barriers to entry of this asset class, allow this to be a great investment, whether you're in your 80s and just starting, just like Ken was, or whether you're in your 30s. The truth is, the sooner you get started in this, the more flexibility and options you have, but it works perfectly compared to other options when you're in your 80s. And I think most people believe that that's just not possible, but you look at Ken, it absolutely is possible.
Well, one other point in the discussion, I think you have brought out figures in the past that most people who put money into retirement put it into stocks and bonds, bank notes, or things like that. Less than 8%, Greg, that actually put their money into rental housing?
Yeah, 61% of Americans own stocks and bonds, and 12% of Americans own rental properties. But the stats show that people deep down believe investing in real estate long-term is the best investment for them. So their actions don't line up with their beliefs. And the reason is because it's hard. They don't know that a team exists like JWB that can make this easy for them.